Alright, gold big picture. So this is the chart from the last main setup that I showed, and it's come down and tagged the third target zone that I had. So initially hitting target 1, rallying back up, follow through to target 2, and bounced up, and then finally broke through the zone again, and then there it goes to 1140s. So now it's at 1144s, and it's kind of the edge of the cliff. You got the round number of 1150, which is a bit of a bell ringer, and we're a couple bucks below that. We also have several trips down into this region from here to here. So we've had 4 trips down. All of them were met with pretty big spikes. Here's this one. Are we going to get it again? If we're not, we have somewhat of a cup and handle pattern where this is the cup and this is kind of the handle portion, which is a shallower pullback, and then the breakdown, and then the projections are pretty dire for gold. I mean, just doing a 1-to-1 off of this guy here is pretty large. That gets you down to 1065s or so. And then if you look at that impulse with an extension, that's at about the 1.5 or so, pretty much. So you basically have a 1-to-1 harmonic at the 1.5. A lot of confluence for that. And to do anything else, you know, going back 700 days, we were trading north of where we are right now, which means we basically are in a very, very prolonged downtrend here for gold. I got to go to a weekly to look back more. When I do that, I'm still below where we were 1,825 days ago. So now I got to go to a monthly. And now I'm going back a long ways. And when I go here, you can see there's a lot of trading commitment here, and we're just starting to break below all of that. We're actually below the most dominant area. This is sort of the last edge of the cliff, you know, Indiana Jones MacGyver zone, whatever you want to call it here. This is it. If you're going to do something fancy, this is where it's got to happen, because if it doesn't, then there's a massive air pocket that pulls us down into the low 900s. And I've been saying for a very long time that the most likely price targets for gold, bigger picture, are either going to be 600 or 900. Here's where things get very bearish for gold. This is bearish right there. Why? Because it's so steep. It's basically killing everything about this, from being a bull run to being a parabolic excursion. When it goes like that, that's not bullish. Even though price is going up, you can make money being long, but that's not something that speaks to the bull cause. This really speaks to advanced warning of the end of move, which we talked about in the live room. As soon as we started trading over 1600s, I was talking about that. So when we get this first initial impulse, outside return, lower high, massive impulse, now we've really got something to work with here. So that initial spike low there, outside return, and that 1-to-1 projects all the way down to this balance beam here. That's pretty rough stuff. The one thing gold has going for it is that it's kind of been going sideways here, but at the same time it hasn't done what it needs to do to correct the bear power that's happening now, and breaks below here. It's going to be tough to keep it away from the low 900s. Really tough. I mean, something new could happen in this area, but that is going to be a real tough job to keep gold from not going to basically 950s here on the top of this balance beam. All right, looking to go short oil.